All right. Good morning and good afternoon, wherever you are. So I'm going to share the stream because this is currently a public stream. It's been a very busy couple of weeks and a very busy weekend. So we had to make use of the little time we had to rest and utilize it for that purpose. I hope you are doing great. I hope you and your loved ones are splendid and they are fine. I hope you've been studying. So we're going to review the price action I posted on Twitter about you studying the weekly time frame for the US 500, which is the ES for this channel because that's what we are currently using. So we'll not be taking any trades until far after the election. So our last trade was a live trade that was taken, I think, the previous week's Thursday. No, not this direct previous week, the week before that. That is, our last trade was, wow. Okay, our last trade was October 24th, which was a winning trade for 2 hour. So let's take a quick look at this session, at this body of price action, the review where to make use of. So this was the last thing I did here that I prompted you all to note because I would want us to do the review together and you understand the inner dialogue of wanting these lows here. That is the midpoint of this long week and also this other week. We've been stretching and over emphasizing the fact of how weeks are imbalances. So the midpoint of that is consequent encroachment because the midpoint of imbalances are consequent encroachment. So now on the weekly time frame, price dropped lower here to this grey pool. So when you get two imbalances like this close to each other, 2 weeks like this which are imbalances, and you get the midpoint of them close to each other like this, the midpoint of those midpoints is a grey pool. So this, the high of it is the high of the grey pool, the low of it is the low of the grey pool, and the midpoint of it is the consequent encroachment. So for the previous week's trading, let's go to the daily time frame and dive deeper. So we had the grey pool corresponding with these clusters of price action here like this. So on we opened here on Monday's trading anticipating this grey pool, the eye of the grey pool to be tagged. So when we opened here on Monday's trading, we traded higher on Tuesday, and Wednesday traded opened higher and had a rally higher to take out the previous day's high and the Monday's high. Any highs resting above these highs will be taken out, and then price dropped lower, dropping below this volume imbalance. So here, as you can see, you have a volume imbalance here. So if you take this volume imbalance and join it out in time, price uses this volume imbalance here inside of this Wednesday trading and use that as an inversion volume imbalance to seek lower prices. So our first drawn liquidity is this, where we would be taking some position off because this is the swing low. This is a liquidity pool where you want to take a portion of profit off. So if you take your flip and look for the midpoint from this range high to this, from this candles high here So this candle is low here, and you look for the midpoint of it, you would notice that this here is at or below equilibrium of it. Let me place this here, so for the lazy students that won't want to do this, so you place your fib here and you seek equilibrium of that range. So the midpoint of it is discount. So we traded from a premium PDRA here after taking out the previous day's highs here. Then Wednesday dropped lower, seeking a discount PDRA, which is this liquidity pool below here. So price did that here on Thursday's trading. So we're going to drop down to the 15 minutes to see that on for the for what went on during Thursday's trading. So which is Wednesday's and Thursday's trading. So Wednesday we had this here. Tuesday made this high, then Wednesday dropped lower. Then Wednesday took out these highs here. Failed to come for this high. This is signifying bearishness in price action. And this now is an intermediate high that is rebalancing this imbalance here from the higher time frames. So when it has rebalanced this imbalance now, it leaves these two up close candles and then drop lower. These two up close candles now, this it will be seen as an order block in its state of delivery. Immediately price trades to the low below the low of this candle. That is it. That's the algorithm signifying it to you that price is changing its state from a buy side delivery to a sell side delivery with this quick drop. This is price indicating to you. Now you want to place a sell order at this bearish order block here, which also coincides with this bearish breaker. So if you take this candle high, the low here, and this candle high, if you make use of the bodies, this here is the bearish breaker. So if you draw this out in time, let me do the markup real quick. And immediately we had this drop lower here, price left this imbalance here, this imbalance here. There's no buy side delivery here, just sell side delivery. So when price dropped lower here at 1:15 p.m., price dropped lower like this, down below this bearish, making this a change state of delivery, which is a bearish order block, and also this bearish breaker. So now you have two confirmation tools here. Now you also have this fair value gas being coupled with this. You have multiple confirmations indicating to you that price is in fact indeed coming for these lows, seeking these lows. So what did you have? Price then an hour later, yes, exactly an hour later, price came up higher, came to this imbalance here. You see the wick trading inside of the imbalance to rebalance this to offer buy side delivery, because sell side delivery was only offered there. Would get into the idea of CB, what it actually is. So a couple of you that are new to this channel can for in fact understand what a CB and a BC is, so you understand it, because it is more than just an imbalance. Because here you have sell side is imbalanced and is inefficient or in the buy side. So at 1 hour later, price made buy side delivery, not buy side liquidity, buy side delivery of buy side liquidity. So price then dropped lower below these lows through the close of Thursday's trading and through the close of Wednesday's trading, and also Thursday continued dropping lower. Down to the final draw on liquidity, which is this gray pool. You see how we trade to it here. Price trades to it here, drop lower, respected it here, drop lower to this low, respected it here. You see the body here, respecting it. Price drop to below the midpoint of it, moved higher, came back to it, then rallied higher, came back to it here, rallied higher. So they want to see if how it wants to trade to these lows here, this relatively called lows here for today's trading. If it's seeking this sell side liquidity, you see how we've come right to our today's trading from the previous week's trading. So this is not much work to get done. Okay, we're coming for this lows now because of this bear with a fair value gap. And here you have the fair value gap. So tomorrow is election. So this is the algorithm giving spectators and speculators a good show for their money. So we've dropped 10 points from the fair value gap. So taking from this highs, from this swing high here, because this is swing high here, to this swing low, the midpoint of it is discount. NV PDRA below it is discount. So you have this imbalance here. Jury's out in time. This is a discounted PDRA. That's a discount fair value gap. So we create a premium PDRA, which is this fair value gap here, and then finally drop lower. So we are currently in we are currently in what is this called? Oh, daylight savings. So daylight savings is back online. Daylight savings is an extremely weird period of time because of you get to readjust and reschedule, refix your schedules. If you woke up today and just eat sell, you'd be in profit because we opened midnight here. So I took out this low, drop low, I created the swing high here, took out the swing low, then took out the swing high, pair that liquidity here, drop lower, use this last up close candle as a bearish order block, draw that out in time. From the bearish order block, price drop lower, leaving an imbalance here, making this a bearish proportion block. draw the bearish proportion block out in time. Bearish proportion block coupled with this fair value gap inside of it here, price chase to it inside, feel this imbalance offered buy side delivery after sell side delivery was offered inside of this imbalance here, this 7:15 a.m. candle. Then we indicated price willingness to come for these lows here because of time. We are currently at a time in which price seeks liquidity. So at 9:30, when price is trading pre-market, you'd expect this kind of move, a trade inside of a fair value gap and price dropping lower. So we have this new week opening gap. Remember I told you all earlier, when you have a large new week opening gap like this, you'd expect a choppy body of price action for that week. So we might be chopping. So where are we chopping to? So I believe we have these lows here, this 5 6. So the lows from September, from August and September new week opening gaps. So we are seeking the October and September and August new week opening gaps going into the next few weeks. So let's say at that point, from this week to the next week. So I'll be expecting a choppy price action seeking lower prices. So this is the business here on the 5 minute time frame. This right here is the 15-minute fair value gap. So do not be distracted. Price drop lower here, offered sell side, offered buy side delivery, which rebalance this. Drop lower, chase to it here, this lows. All of this here is the other block being seen in the 5 minute time frame. This was the other block on the 15-minute time frame. Draw that out in time, price chase to it, and then drop lower to sell side liquidity we indicated. Immediately we just came to this body of price action, and it was all done live. So if you just join us, scroll back and see the logic behind it, coming from the previous week's trading down to this week's Monday's trading in preparation for tomorrow's election result. So we're going to end the stream at 4 p.m. so I get other things done. This will be an amazing set of weeks. I have no idea what the week will offer or does entail, but we'll see. We'll see. We're going to see what the week will does entail. So I'm still here with you watching price action diligently. We're going to be ending the stream by 10 a.m. because I have other matters to attend to.